So let's go ahead and let me give you a preview of what I had planned to cover today. One of the things at Avalara that we like to do is, we get an opportunity to speak to certainly hundreds and thousands of customers in different verticals. So we like to talk a little bit about different industry trends, both from the customer level, but also the macro level as far as what we see in sales and use tax wide. We'll of course speak to the manual sales tax compliance challenges, because generally speaking, usually about 80% of the folks that attend these webinars come from the viewpoint of a couple different scenarios. One is an IT professional is being asked to be on the call because they want to get further context from the accounting department of what tools are out there to help solve the manual challenges they have. It may be someone new coming into their position that's never really done sales and use tax before, that wants to have a better idea of what could be out there to help me make this more efficient for what we're trying to do internally here at our company. And then lastly, we have seasoned vets, right? Folks that have been doing this for 20 years. They might be on the phone to do some Q&A, or they're looking for maybe a particular nugget of information or to stay up to date with what's going on out there in the marketplace. So we hope to help each viewpoint today. Please do ask questions at any point. I do have the Dynamics GP version of AvaTax loaded if anyone wanted to see Avalara specifically within Dynamics GP. Just shoot a comment in the question box as you go along in the presentation. So with that said, let's jump into it. What's the common theme out there as we talk to customers? Generally speaking, the recession's over. I know that we see the stock market moving, north and south, 200-300 points, it seems like, every other day, depending on what the news is out of China, the Fed, or etc. But, we get an opportunity, me personally, I get an opportunity to speak to probably somewhere between 50 and 150 controllers, CFOs, and owners of companies. And generally speaking, it's not uncommon for them to say, look, my job has been tasked to grow the business and not spend a dime, right? That's what the owner wants, and that's generally how the goal is. And the reason why they're talking to Avalara is when they're looking to grow their business, the strategies involved often create additional tax requirements, right? Whether they're acquiring a company, they're looking to take a new market position by hiring a certain sales rep in a new market or take on additional products, or they're looking to sell online and maybe they've never really done that before. They're traditionally a B2B company and they want to do some more direct-to-consumer type processes. So that's the type of customer that we typically are often talking to. And when they're talking about growth, obviously these next elements are typically on their minds. They're thinking about we're needing to expand the business, but we can't expand the overhead related to support it. Otherwise, why do it? We're not getting any profit margin from it. So it's about what back office things can we do to automate the processes? What other things can they do in their other internal processes, certainly to improve those processes? But in the context of sales and use tax, this area comes up. And from an Avalara viewpoint, when we think traditionally out there, for anyone that's certainly been around for a while, you may have heard of a company called ADP. So payroll tax compliance. It's over 30 years old now, right? How many companies really outsource their payroll tax today? A lot of companies do. For a lot of the same reasons, companies over time have really automated payroll tax. Avalara's belief is it's going to be a very similar marketplace in the sales and use tax arena in the years ahead, and we'll kind of explain some of the dynamics around that. So, this was a couple customer-specific points. From a market dynamics, why do we believe that, or what are the trends that we see? Ultimately, when it comes to sales and use tax dollars collected on a state-by-state basis, not every state, but the majority of states, sales and use tax makes up a sizable portion of their overall fund, right? And when you look back to even in 2013, if you aggregated the budget deficits across the United States, I think the number came to about $55 billion. So I used that number in 2013 because states are using different strategies to expand their tax base, right? It's not politically attractive to say, well, let's continue to cut funding to the colleges, right? Or let's let's raise property taxes, or anything that's more that kind of type of tax, income tax. It's not a politically astute thing to do. So what these states are doing is, while they do obviously change some of those laws, they're really going after expanding their tax base in different ways. And you've certainly seen it over the last 2 years. You've been really seeing it before 2013. But the first step is, why not just hire auditors? It's pretty easy. We hire auditors. They find businesses that are really out-of-state businesses, potentially, that are doing business in our state, that should be registered in our state and charging and collecting tax. It's found money. Auditors are a good idea. California added 100 of them over the last 3 years. And they don't always reside in California. They could have the California auditor sitting in New York, working with the New York's auditors. So the idea is, that's one way they're looking to expand their tax base. Oftentimes, especially for the seasoned vets on the phone, taxation on services. Generally speaking, taxation on services has been non-taxable over the years. More and more states are really looking at passing and have passed legislation around, well, we don't believe we should do that anymore. Why don't we go ahead and start charging tax on services provided in our state? That's going to help us collect some money that we traditionally have not been collecting, and help us pay down to these budget deficits. Digital products, services, content. We bought books. Our kids are buying, and we play board games. They're playing chess on their phone. We watch movies on a DVD. Our kids are watching it on Netflix. Look at the city of Chicago. They're trying to tax Netflix services. So you're going to see and continue to see legislation around, just the way the economy is shifting, because traditionally states tax obviously tangible property, and more goods and services are delivered electronically. Federal e-commerce legislation. Now, I'm just generically describing it as that. Legislation that has been introduced to to the House, and really this legislation is about how do we compel companies to register in every state, because we want to level the playing field at the retail level, so that an internet-based company has some kind of advantage over a locally based company in your area, right? And while that may or may not go anywhere, the states are really using the other three and the last one here on the list to expand their tax base and not have to wait for things on the federal level. Because let's face it, on the federal level, really driving state decisions, it's not a common scenario that actually gets passed through the Senate and the House. Economic nexus, what am I referring to? If you're familiar on the income tax side, it's a concept. On the sales and use tax side, it's really just generally saying some states have rules that we don't care if you have a physical presence here or not. It's basically, if you do enough business in our state, you have economic presence, we want you to register, collect, and charge taxes in our state. So these are the overall aggregate trends. And ultimately, when customers look at, when or if they have to register and really expand their footprint to deal with more and more sales and use tax issues, they really come to the idea that, similar to payroll tax, it's a non-revenue generating activity. It's starting to become more and more time consuming. And generally speaking, the folks at the top are looking at reallocating that time to other areas of the business, and not adding to the cost center of this activity with additional overhead. So let's transition over to the challenges of manual tax compliance. So here's there's two different studies that were done over the past 2 years. The Aberdeen study on the right, with the terms of time that's involved in this process, and a Wakefield research study that was done in 2013 that oftentimes had a lot to do with feelings and attitude around this arena with tax and finance professionals. So what's interesting is, at the flip of the coin, that's how people feel. It's a 50-50 shot on, do they feel if an auditor came in tomorrow, would they likely find mistakes or not? So half feel like, yeah, that might happen. Half feel, now we feel pretty good. And so that's, it's kind of interesting. Usually from a compliance standpoint, there's a higher level of confidence that you're you're going to come through the audit in pretty good fashion. But I'll explain in a moment why many folks feel that way, as there's such a moving target as it relates to this area. The time spent involved in managing tax compliance can really vary from company to company. Certainly, there's a difference between managing tax compliance and doing it well or correctly. So sometimes we see, the companies don't really spend much time, but they may not be spending the right amount of time, and they won't know until they get through some audits. So where are some areas that we start to see complexity with manual tax compliance arise, right? So challenges start off with, and you think of our day-to-day lives from a personal level, when we're working with Dynamics GP and we're setting up a new customer in the customer card area, one of the first decision points that we're thinking about is, do we have nexus? Do I need to build a tax schedule? How do I look up that zip code of where the customer is located to apply a rate right to that particular customer? Now, I realize that many of us on the phone may be from the Midwest here. I'm from Ohio. I'm sure many of you are from Michigan. Michigan and Ohio, frankly, are pretty straightforward. Zip codes work just fine, right? Same thing with Indiana. If you start to build your footprint outside of the Midwest, you start running into more issues with zip codes. Just to be on the aware, in certain areas of the country, you'll see the way, which is quite substantially different, quite honestly. So we recently hired this gentleman named Mo. Mo looked at this graphic here of the United States, and by the way, each color on the screen represents a different taxing jurisdiction in that particular county or state. And he said, Matt, this looks like my grandmother's quilt. I said, okay, haven't heard that before. I said, but one thing about it is when you look under the covers, it becomes more challenging. So you see the different colors from the 30,000-foot view, but when you drill down into it and you're looking in areas similar to the Denver market here, you can really be in one particular zip code, but then be driving down a street and hit 3 different taxing jurisdictions that could range from 4% to almost 8%. And it really ranges based on the special taxing jurisdictions being applied. So Mo's next question is, looking on the screen here, I don't get it. Why in the world would someone draw a tax district with all these sharp edges and, this block on this neighborhood is not included in that taxing jurisdiction, but it is in this one? It just makes no sense to me. So for the benefit of folks that really don't deal with this too much, I'll show a recent example of how this happens and a hilarious example of how governments continue to screw up. So I said, Mo, let's go back to 9th grade, high school government class. You remember the concept of gerrymandering? He said, well, I remember the word, but I don't really remember. I said, well, basically it's the way politicians use to redraft the jurisdictions so that it helps them politically. I mean, we really think about it, 90% of elections they're won at the primary, because I don't know if it's any different out there in Michigan, but here in Ohio, you pretty much know the one side doesn't have a chance to win and the other side does. But either way, they're really drafting and crafting the jurisdiction to meet certain requirements politically or business-wise. So here's a recent example here in Columbia, Missouri. It's a link I just found out there. It's late August, early September. And it's some property owners wanted to create a community improvement district that's near the campus there of Mizzou. And in Missouri, the way their law works is if you don't have any residents in your jurisdiction, then the property owners have the right on all the votes for things like adding a sales tax. Very, very important. So what you'll notice here, the drafting of how they drafted the tax boundaries have no real logical, why do they have all these curves? Well, the curves are really around carving out all of the student housing that this is near. But they screwed up. They had one resident, a college student, Jennifer Henderson, that's actually in the district. And guess what? Jennifer does not want a sales tax. So that mistake is going to cost these property owners somewhere in the neighborhood of, I think I read $220,000 to around $260,000 in lost sales tax revenue if they can't figure out this problem. and get past this one resident that's not going to vote in their favor. But this is the perfect example of gerrymandering and how these taxing jurisdictions really get drafted like that. So let's talk about product taxability. So this is another area of tax compliance, especially for growing businesses. So kind of going back to the beginning part of the presentation, I acquire a new company or I'm expanding my footprint. The products you sell in Michigan may or may not be taxed differently in another state. You know, the simple example is everyday candy bars. If I buy a Milky Way original, you know, it's tax exempt in most states. If I buy the Midnight candy bar, it's taxable in most states. Why in the world it's different? It's due to one ingredient, flour, in the original. The other one's treated as candy. So it's a little bit bizarre. We don't really think about it. But I realize that many of us on the phone may be in the service industry. So it kind of goes back to that concept of, oh gosh, services are generally non-taxable. That's true, but it's changing. So as you'll see, this is a graphic of different states have laws on the books of how they tax, for example, services related to tangible property, or even professional services. Like I'm looking here, it looks like New Mexico just likes to tax every service practically. Now, within these buckets, there's certain nuances of what services really represent personal services. I don't know if that's getting a haircut or something different, right? Whereas other states like California say we're not going to tax services. But keep an eye out for that continuing change, in the services that you provide. And as you grow your footprint, you may find that, one state that you never really thought about it could be really starting to tax more with services. Sourcing rules. So we don't always think about this that often. I'm not going to spend too much time on it, but really it's, how this describes the concept of how do we really assign the taxing rate or jurisdiction to the transaction of the customer. For example, if you're in Ohio and you have the transaction originating in Ohio to another Ohio customer, it's taxed differently than coming from Michigan into Ohio. So how is that completed and set up in your financials, right? How do you maintain that? I'm not going to get into the nuances of California and Texas. Many of you on the phone may not have the difference between intrastate and other transactions that are in that state. I'm more than happy to talk to you afterwards. Drop shipment. This is the area that I like to call the Bermuda Triangle of taxation. So again, I could spend an entire 30 minutes at least on drop shipments. But to describe it briefly, if I'm a Minnesota-based business, I'm selling to a customer in Louisiana, I'm having it drop shipped out of Texas. The wholesale on the order is 100. I sold it to the customer for 150. There's different tax decisions in different states. On some want to tax it on the wholesale order, some want to tax it on the invoice to the customer. Of course, there's exemption certificates, and there's consumer use tax that could apply depending on a variety of different scenarios. Now keep in mind, and also in some additional states, drop shippers may also be creating nexus for you as a business. So let's talk about exemption certificates for a minute. Typically we get calls for customers around exemption certificates. It's kind of one of those things that, we just collect it and move on, and we don't, store it in a drawer, or it's just not high priority. And when it is, it's usually when when we're either preparing for an audit or going through an audit. And what they find is there are continual challenges around valid certificates that customers are providing, or they're just flat out missing certificates. Orders get pushed through because sales wants to get it through. Oh yeah, we'll get the certificate. It's 3 weeks later, we forget. Not many companies are creating Excel spreadsheets for when certificates expire. So not every certificate is permanent. In different states, they have really a different useful life. Since we're on the topic of collecting documents, I do like to mention, W-8 and W-9 management we do see is more of a improving focus, I would say, for some industries to deal with the upcoming FATCA regulations. So what are the top challenges that we see with the exemption certificates? This is an older survey done in 2006, but as I talk to customers, it seems to be still hold true today. And what it represents is, the activities involved with certificate management and where they fit in terms of the key challenges from a business perspective. Meaning, is it becoming a tax or audit issue? Is it a customer service issue? Or is it just frankly administratively aggravating? And as you see, it's still the collection and the expiration component that is really the highest level of challenge for most companies, affecting all three components of their business. So, again, just further information to give you a feel for what does the marketplace look like when it comes to exemption certificates, and it's still oftentimes around the collection and expiration around it. Now, in terms of doing these sessions, I always like to touch upon understanding nexus. The reason I do is, being here for 3 years, some of the most painful conversations we have is with certainly companies that have really created nexus, and they did it years ago, and they likely have a pretty sizable financial exposure. So what is nexus exactly? So I do realize some of us on the phone are going to hear that word and go, what does that mean? Is that something from Star Trek? No. It's really the legal term used to describe a connection between your business and a particular state. And typically we're really referring to out-of-state business here. So, and traditionally the concept has been around physical presence, meaning I had to have a building in that state to really worry about it. But I'm bringing this up because these are some of the really the greatest hit lists, I would say, of different ways auditors have been catching, different companies and really compelling them to register, collect, and file in their state. One I'm not seeing on here, or I don't know if it's described accurately, is company-owned vehicles. So we see stories or scenarios around, auditors sitting at the border between states, looking and recording at the company-named trucks that cross the border, to then look at it later to see if they're registered in that state. So, fun fact, Wakefield Research, the research that we were looking at before, had this question around audits. So it said 44% of accounting professionals feel an audit is more stressful than a divorce. Now, at first I said that doesn't seem right, and then I really looked into it and it said decided to contest the audit. So that's a key part of this. Contest the audit means these are folks that really have been, it's likely that they have a pretty substantial financial exposure that's likely related to nexus, or it's related to, they have a disagreement between the product and service taxability within a particular state. So when you get into that range, it can be quite substantial. I know I've personally seen seven-figure issues. For most of the part, that's not the case, but obviously if you're contesting the audit, you're willing to put the time in, and it's a pretty stressful process. So with Avalara, how do we help, or what is the way, I guess, our tools really fit into this scenario overall? We're a web-based solution, so when you think of what's the known quantity to this part of taxation, it's, look, the rates are going to change, taxability rules can change, reporting and filing requirements can change. So the idea of making that local to your environment is only going to bring more complexity to your overall financials in terms of upgrades or other issues. More moving parts means that still has to get updated on a monthly basis. With the web-based version like Avalara, all of those moving parts are housed in our tax engine in the cloud. Our team of tax professionals maintains that on your behalf. And then we create integrations with Dynamics GP and our tax engine. So when you think about it, what's it actually doing? It's sending data to our tax engine for us to make a tax determination. So in the cloud, that's where you would have configured things like, where do you have a responsibility to charge and collect tax? It's going to be looking at, in Dynamics GP, do they include something in the exemption certificate area or in the customer card that the customer is exempt? What products and services are we really looking at to make a tax determination on that particular customer? And then we're going to bring those results dynamically back into the quote ordering and invoicing process of Dynamics GP or other products like CRM or et cetera. But again, the idea here is I'm setting up a customer. I'm thinking of previously before I had to think of, do I have Nexus there? If I do, great. Well, I need to look up a zip code area. In the way Avalara works, you just apply AvaTax as the tax schedule. What that does is it converts an address to a GPS coordinate on a map, so it improves the calculation of the address. And that's really indicating to Dynamics GP to really trigger and send the data to our tax engine to make tax determinations for the process going forward. So at its highest level, that's a little bit about what Avalara really does to tackle some of these moving parts. And just kind of give you an example of a customer that of reasonable size. You know, we have different size customers that come on these. I want to give you some gauge. This is a, you know, certainly it's a printing company, basically, manufacturing and printing, pretty small business. You'll notice they've been audited several times, 4 consecutive audits that have been fairly costly. And the reason why they had 4 consecutive audits, by the way, in case you haven't gone through an audit, typically if the auditor finds issues, they're coming back at some interval, unfortunately. So they finally fixed the problem in terms of incorporating automation. And certainly, as you can see, Claudia's notes here as far as what their time would have been spent as they impacted you know, their business. So I wanted to catch up on time to get everyone out of here on time, or if anyone's interested in certainly going through Dynamics GP further, I'd be more than happy to. You know, obviously one of the main reasons why folks really automate, by the way, is aggravation. They just, you know, it's an area of tax compliance that they just don't want to deal with.